some advantage actually from the exodus of mining hardware from China, because that caused a big dip in the hash rate. And so the people that remained online got an artificial boost in profitability for quite a few months there, while that equipment found new homes and power, the hosting infrastructure was assembled in different countries.
That big plunge in hash rate.
Yeah, so I think that kind of accelerated the BMN return profile by 2 or 3 months or something like that. So it's definitely ahead of schedule in terms of, what loosely people thought it might have mined based on, the difficulty curve that was happening before that. And of course, it took a while, but it came back like maybe about 6 months or something. The hash rate had recovered. But that was definitely a boost for holders. Basically, demand for the BMN profile tends to be high when Bitcoin mining profitability is surging, and that's basically when it looks cheap in Bitcoin, right? So historically, people bought the BMN at different prices because there were 8 tranches. The tranche 8 was on the Bitfinex securities market, and the other 7 tranches were via Stocker placement, and then of course people trading secondarily. As the price ranges they paid in Bitcoin varied between like 4.5 Bitcoin and I think 8 Bitcoin, and so I think like three or four of the 8 tranches are in profit in Bitcoin terms already at the halfway mark. So you can see that the BMN becomes cheap in Bitcoin terms when the Bitcoin price is high, and so then people will use Bitcoin to buy the BMN, anticipation of at maturity getting back more Bitcoin than they put in, and that's already worked out. For some people who at 5.8 Bitcoin mined, but who bought it for 4.5, and there's like 2 or 3 tranches that are in that scenario. So that's quite interesting to see. Yeah, I mean, so we were always interested to make a series of BMNs, so to make another one. Because it's a term instrument that lasts for 3 years, so we're interested to have like multiple overlapping. So there's a kind of ongoing series of them. So the initial one was series 1. So we're certainly interested in series 2. It's a little dependent on the market and the pricing, because currently it seems that people who are hosting miners are paying a premium compared to the BMN price. So it's actually, an interesting strategy to sort of arbitrage BMN against hosting. It's going to complicate arbitrage, but there is some significant spread in there.